Let's put some of these points to Andrew Holland, who's with us now. He's Chief Executive Officer at Avendus Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. Andrew, of course, is someone also who's got a keen eye on some of the global stuff. And that, if one is to believe some, is the head. And emerging markets are now the tail. Would you see it like that, Andrew? We had somebody in the morning, Jeffrey Dennis, who was saying that it's a much more tougher environment because the competition for flows is not just other emerging markets, but it is the US itself. Just your thoughts there, Andrew.
Yeah, no, I mean, the US is really the only game in town, right, Prashant, because all the action's going to be there. And all the negatives, from what we know of what President-elect Trump is saying, is going to impact emerging markets. So I think, until he takes office and we see some of those policies, it's difficult to make a case. The best case we can make for India at the moment is that relatively compared to anywhere else, and that's mainly China, we're going to be okay. But that's really not a reason to buy. And if you think about, let's say calendar year next year, if you're expecting earnings growth of, say, 10%, which is looking like at the moment, so you could say maybe the index goes up in that kind of a level. But, in the US, I'm looking at, bond yields of 5%, because everyone's talking now of yields going higher or the Fed going on hold, if not increasing, the kind of interest rates in the second half of 2025. So 5% yield, given I might have depreciation in India of 5%, I might as well stick where I am. Why do I need to come to an emerging market? If anything, the one place I'd look at is China, because they do have a lot of power to dry, which they can use to stimulate their economy. For India, unfortunately, at the moment, the government spending's really not picked up, so that multiplier effect is not there going into the second half of the year. And there's no, earnings are being downgraded, Prashant. We talked about this before. Volumes are lower than expected, but more importantly, margins are a lot lower. And so there's no, with the valuations still where they are, I just can't get excited at the moment.
But, although to be fair, Andrew, in the US also, S&P trailing P multiples are north of 25. So it's not as if valuations are cheap in the US, right? Here in India, as you asked, it was a rhetorical question. I understand. Why do I need to come to other markets, right? In the US, I mean, you got about 10, 12, 15 companies which are driving bulk of this gain. Everything else is down in the dumps. And maybe that'll pick up. Here in India, though, that's not the case. It's been the opposite, right? It's been small, mid caps, etc., which have led this rally over the last couple of years. Large cap returns have been okay. So there is that, Andrew.
Yep. So going back to the US, but what do you have, Prashant? You have an expected corporate rate tax cut, which is going to be earnings per share, kind of accretive, right? And that's going to really help the kind of small and mid cap companies as well. And that's where the excitement is, and that's why there's a lot of talk about M&A picking up in the US. So it's going to be a broader based rally. Is what the market's telling us going forward in the US, and that's why it remains kind of the main game in town at the moment. But for India, that earnings pressure is not going away for the time being, and I don't see what the upgrades are. So either the market consolidates and then earnings start to improve in the second half of 2025. Or valuations come a bit lower. So I think valuations probably come lower before earnings start to pick up. And plus, Prashant, one of the things that we've all been kind of banking on is an interest rate cycle, which is going to be lower. And now there's question marks about that, particularly in the US. And I think, unfortunately, the RBI will be on hold in December as well. So we're going to have to wait sometime into 25 before the possibility of a rate cut, starts to happen.
Hi, Andrew. Good morning. Good to see you. And Andrew, I take your concerns on board with regard to the Indian markets. And the Chinese stimulus was something that, started that entire shift of hot money from India towards China. But actually, their stimulus has been not as much as expected. And from an Indian government perspective as well, we're seeing spending actually has picked up just in the last month or so. So hopefully that holds us in good stead. So I get your point that it appears right now you lean more towards the US markets in comparison to an emerging market. But from the Indian markets, there'll be select stocks as well as sectors that still have a good runway. Something that you're bullish on here in the Indian markets?
Yeah, some of the themes that we talked about before, which is electronic manufacturing sector. That's one theme which I think will continue to play out over multiple years. So I still like that sector, and of course it would be a beneficiary of potential tariffs on China as well. So I do see that as a theme that will continue to play hard. I still like the kind of hospitality sector in terms of people spending. So airlines, hotels. I still think, I was talking to someone the other day who said, they're trying to book a hotel for a wedding and it's all booked through to March, April of next year. So, and these are in not just the main cities, these are outside of the main cities as well. So hotels are continuing to see very, very strong demand, and obviously that's going to help their margins and revenues. So those are the two sectors which I like as a theme, which I think will continue, as well as premiumization, which we talked about before. So those themes are not going away from India, and I think that's where I like to play. The rest are going to be more trading ideas. I could make a case for buying metals at the moment on the back of that China will have to do a stimulus sometime in the next 2 to 3 months, and that will boost metal prices in the short term. So usually the market will play that out before, but these are more trading calls rather than long-term calls.
Are there any short trades that you have in this market right now, given the fact that there are weaknesses? Would there be anything that you would sell? You believe that despite the decline, there is further downside from here?
No, I think there is further downside. I think there's another, possibly, if I had to have a nifty trade, kind of trading range, then I'd probably say anywhere between 22 to 24 would be my kind of guess. And sometimes you overshoot that. But what I think will happen is that, you were talking about it prior to me coming on, is that FII selling anyway kind of goes down in December. I think everyone, wants to kind of, book whatever they've done. And not take big calls unless there's something more significant globally, and therefore if domestic flows remain strong, you could see that kind of year-end rally. But I think it'd be a relief rally rather than it'd be a sustainable rally going into 2025.
Just a few names. Sorry, go on. Finish that point, Andrew.
So no, I was going to say this. So you're asking about short. So I think the market's looking a little bit oversold at the moment. So you might have that rally of 1, 2 to 2%. So I don't think the short side is where it'd be. I think that for a retail investor, with all the things that are happening at the moment, just sitting on some cash for the next 2 months is probably not a bad strategy, and getting some returns from fixed deposits or liquid funds, just to see what how President-elect Trump kind of comes in, what policies are, how that's going to affect all emerging markets.
Any thoughts on Swiggy, Andrew?
I can't talk about individual stocks, and as you know, we were one of the lead managers, so I really couldn't talk.
I see. Got it. By the way, I just want to highlight, it's looking good. 10:1 advances to decline ratio. So 10 up for every 1 stock down. And when was the last time we've had it? Usually we've had the reverse for the last many days. And 200 points now on the Nifty. So whatever happens after today, but I think as you go into the market holiday tomorrow, if you go home with this kind of a setup, I think portfolios will feel a little bit of relief, which have been, of course, under pressure all the way. The biggest volume-led gainer is Z, which is up 6.5%. The number 2 place is Paytm. Paytm, of course, never really had a big correction or anything of that sort. High was about 853, low was about 750, and is already back above 800 as we speak. PG Electroplast is up 10.5%. We highlighted that earlier. And that's, of course, come off the highs, though, but still up. Chennai Petro is up 6%. That's a decent pop coming through there. Deepak Fertilizer is up 5%. Granules is up about 5%. These are all individual names. Webull Solar is up 5%. There is GMDC, which is up 5%. Shakti Pumps is up 5%. Shakti Pumps was up 5% yesterday as well. Almost back at 5,000 rupees, Shakti Pumps. And MRPL, the other refiner, standalone refiner. So Chennai Petro and MRPL, both 5 and 4% respectively, with very, very strong market breadth at this stage. Vari is the biggest volume-led loser. Honasa, though, has picked up from the lows. The low today is 242. Stocks at about 255 right now. IGL and MGL are still sulking, but it's a half a percent, 0.75% after the 10% plus knocks that we saw on both these names in trade yesterday. Andrew, it's a pleasure. Thank you very much for joining us. Great speaking with you here on CNBC TV18 as always. Thanks very much. We'll speak again. Nigel.